Hi traders, it's Alberto, and this is the Pro Traders Workshop series. Today's lesson is on FX Advisory Indicator and confirming these buy and sell signals that we see on the FX Advisory Indicator. This is more advanced video, and we have not gone over this in the Pro Traders Workshop for many of you. This is a lesson that is usually reserved for the last month of the 3-month program. But it's very important that everyone understand why these levels of support and resistance exist. And so I'm going to attempt to show you why, and hopefully that you'll have more confidence taking these trades at these levels. Number one, the advisory indicator works a lot better on the 4-hour daily chart weekly. Okay, it's more powerful, these levels. There's less noise, less repainting, and there's more money to be made when you place trades based on a daily signal. So let me just show you a few trade setups that were confirmed using a Fibonacci extension, Fibonacci retracement, and also previous support and resistance level. The first trade I wanted to show is on a daily chart. Okay, so let me just get this started here. We have, notice this channel, the lower band of the channel. Okay, so I connect the swing points that actually started all the way back here. So I connect the swing points and I use the wicks. Okay, so you know that if you're trading in a channel and a downtrend, then markets will hit a channel, rally, hit the channel again, rally, and come back down. Now, if you notice, this is on February the 24th, I think, that the advisor indicator gave us a buy signal at the bottom of this channel. It also happens to be a divergence setup as well. There's the wave patterns on stochastics are going up, but price action, the swing points, and swing points are when you have 2 or more candles to the right, 2 or more candles to the right, to the left, that is a swing point. And then you have to find another swing point and connect them. Here's another swing point, and here's another swing point. So each of these swing points have 2 or more candles to the left and right, which makes them a swing point, and you connect them, and that's how you come up with a lower channel. And price, when it hits that lower channel, usually reacts to it. So the last channel here was at 118.08, and the advisory indicator gave us a nice buy signal. Not only that, it was confirmed by this morning star. And look at this run. Now, notice the morning star, and the next day the market retraced what it normally does, retest the lows. And this thing went up 409 pips. This is very powerful using this technique on a daily chart. And the reason being, there's a few reasons. One, there's a lot less noise on a daily chart than there is on a 1-hour chart. Oftentimes when you see these setups on a 1-hour chart, price gets repainted, the advisory indicator changes. But on a daily chart, that doesn't really happen. Okay, all you need to know is your candlestick patterns and find support. Make sure stochastics is oversold, and you have a great trade setup. Now on the top, the same thing happened. We connect the swing points. Here's a swing point, right, on a daily chart, right there. You connect the next one, and then you connect the next one here. You connect these, and look, it extended all the way to the most recent activity on euro yen. So look, the advisory indicator is giving us a sell signal at this channel. Stochastics is overbought, and that is an easy trade to take, okay, right there. So if you understand candlestick patterns, or rather Fibonacci extensions, Fibonacci retracements, this is going to be easy for you because you can confirm the advisory indicator. You can confirm what the advisory indicator is telling you simply by understanding Fibonacci. Now, that was not the only resistance level confirming. Now, if I use extensions, and this lesson is just showing you how to appreciate the levels of support and resistance using Fibonacci extensions, but to learn how to draw them, that would have to take another video, and I'll do that much later. So I'm just going to show you. I took a swing low and swing high. I'm sorry, I drew this incorrectly. Let me just do it again. So you can see almost to the pip how this works. Here's a swing high and here's a swing low. And price rejected the 261 extension from this run up, which also happens to be the top of the channel and a previous resistance level with stochastics overbought. These are the high probability trade setups. And when you see this down here and up here, when you see this on a daily chart, you can stay on these trades for a minimum of 2 days. And look at this run all the way down to, basically put from the swing high to the swing low. It's already put in 198 pips, and it's not finished. Okay. So let me just remove that. So using the FX advisory on a daily chart, especially if you work a day job and you can't be at your computer, every single session, you can trade off the daily chart, and all you need to do is wait for a good setup using the advisory indicator and stay in for a few days. Okay. So again, here are the swing points that we connected, and this is the lower channel that price kept on bouncing off, which is very common in Forex. And then finally at the bottom here, there was a trade. Now, the indicator does not print prior resistance and support levels. It only will print most current. So I'm sure there was a buy signal up here and a buy signal over here. We're only seeing the most recent. Okay. Okay, here's another trade setup, but I want to show you on the 1 hour chart how it's so important, if you do use this indicator on the 1 hour chart, that you have several reasons to take a trade so you don't have false signals. Number one, stochastics is overbought. Number two, it's hitting a previous resistance level from March 15. Number three, we have an evening star in the 1 hour chart right there. So this is a very high probability chart, trade rather, on a 1 hour chart. The only thing I would have done is look at a 4 hour chart to see if there was a level of resistance, and there was. This was all resistance up here, okay? And it just collapsed and then sold off, okay? This is the Australian yen on a daily chart. So we notice that there's a swing high up here, okay? And there's a swing low down there, okay? So we want to know, why did it react to this level and collapsed? And why did it print the FX advisory indicator gave us a sell signal? When prior to this, the market was clearly in an uptrend and broke a trend line and looked like it was going to go to the moon. Well, again, it uses Fibonacci extensions and Fibonacci retracements to find support and resistance. So here's the swing high, and I take my Fibonacci tool, draw all the way down to the swing low, and notice the 61% retracement level not only hit it once, but hit it twice, and that's what the advisory indicator was giving us a sell signal. Now, if I did not want to blindly trust the indicator and I want to make sure that there's a candlestick pattern, then very simple. Let's just remove the fib retracement, and there it is. There's an inside bar, the most recent trade on Aussie yen. There it is. There's a sell level at 61% retracement level on a daily chart, and look, you could have just stayed in this trade for an entire day. Okay. Again, here's another trade set up on USD CAD daily chart. Price, the advisory indicator is giving us a sell alert up at these levels. And where is that? If you look back, there was a resistance level back in November 11th, and then again, same level right there in December, and then it gave us another sell signal around the same. I mean, this was not the best trade setup because we don't have this is swing high. It's much higher than this swing high, but we have all this congestion around anywhere from 135.05 to 135.32, which is not a lot of pips. It's what, only about 25 pips. So anywhere along this level where the daily chart, which I love using the daily chart because it doesn't it doesn't repaint. It just filters out all the noise from the smaller time frames. We have a bearish engulfing candle that turns out to be an evening star, where the advisory indicator is giving us a sell. The other confirmation is, of course, stochastics indicator. So we have an evening star, stochastics indicators overbought with divergence, but I'm not finished yet. Notice this double top. We had a 1, 2, 3 pattern here. So I would take my Fibonacci tool and draw it from the swing high to the swing low. Oops. Let me draw it again because it just slipped on me. Probably just going to have to hold this. Swing high to swing low. And notice where the 423 extension ended, right at the sell level, which happens to be a previous resistance level. It fell on me, so it's supposed to be all the way up here, the extension 423. But that was the level. Not only did we have an evening star, but we had 423, which is the last extension. And stochastics is overbought. And this is on a daily chart. And look at this rundown. It's still not finished. Okay, so far 100 and almost 200 pips. Now, it's very important that we watch these videos, and we'll be going this over the trade room, for the simple fact is that I will be calling these trades, these long-term trades in the trade room, and I want everyone to recognize what I'm seeing, so you'll have the confidence to take the trades. Many of you are not taking trades simply because you do not see it. And of course, we're trading off the 1-hour chart now, but when I do send these signals based on daily and 4-hour charts, I hope you can take, have the confidence to take the trade and be able to draw these Fibonacci, use the Fibonacci tool to draw the support and resistance and see, yes, this is an extension, and we have, several reasons why we should be selling at these levels. Okay. So that concludes this video. I do not want to make it more than 15 minutes. It's going to be more of a 3-part series, the FX advisory indicator and Fibonacci levels and price action. Email me if you have any questions on this tutorial, and have a good weekend. Thanks for watching.